instead of having to compromise on how you build your rates or compromise in the tools that you use, you've got a full workbench designed specifically for this, for rating. And that gives the end user this wealth of ability to be creative in how they approach the business problem and not have to worry about what a specific policy admin system can or can't support.
You're listening to Talking Tech, part of the Rethinking Insurance podcast series from WTW. In Talking Tech, we explore the wide range of technology challenges facing insurers, from AI and data science to open source solutions and cybersecurity, with a focus on how we help insurance companies tackle these issues.
Welcome to another episode of Talking Technology. Today, I am thrilled to be joined by two guests, one of whom is actually a return guest. So John Heidelberger, who leads up our global technology consulting practice. Welcome back, John.
Great, Charlie. Thanks for inviting me back.
And Peter Harrison, who leads our Americas practice for technology consulting. Welcome, Peter.
Thanks, Charlie. Great to be here.
In today's episode, we are going to be talking about externalized rating, and we're going to actually be looking at it from an IT perspective, which is fantastic. We've had a lot of business practitioners on some of the recent episodes, and I think, given that we're called Talking Technology, it's good to kind of harken back to our roots and have some of our technology consulting folks on and try and approach this topic through the eyes of IT. So that's what we're going to do. Externalized rating seems to be getting a lot of airtime. Maybe we can start off with just exploring a little bit about what is externalized rating. So what does it mean when you externalize your rating? And perhaps get into kind of what's the typical plumbing and architecture that is needed to support that. And maybe I'll open it up to either of you who wants to start.
Yeah, Charlie. I guess I'll take a shot at what is externalized rating. The idea behind externalized rating is, creating a purpose-built tool that business users, actuaries can use to create the rates, and then have a tool that runs those rates natively in production without necessarily interpreting them or re-implementing them in a new system. And the idea behind it is that a company like ours, employs 1,000 actuaries, right? And can really get into the complexities of and offering tools that support creativity, that support the underlying tools that people need to really maximize the value to an organization. Maybe I'll let Pete talk a little bit about how you wire that up, what the architecture looks like.
Just in layman's terms, when we're talking about externalized rating, we're actually talking about rating that's not done within the policy system. So if I'm an insurer and I've got a policy system and it's got a rating component to it, when we talk about externalized rating, we're talking about something outside of that platform.
Yes, Charlie, that's right. Generally, it's independent software. It's sort of managed, controlled, installed, maintained separately from the policy admin system. And basically, it just provides more flexibility in terms of how it's used, where it's deployed, and in terms of maintenance, updates, and deployment of rates. Just provides less dependence on IT that is working on a policy admin system on a daily basis, and allows rates to sort of be updated and changed and maintained much faster because they're not dependent on other changes, other initiatives, other projects that are happening within the sort of the monolith that often is the policy admin system.
Okay, thanks, Pete. And so I guess to John's question, kind of from a plumbing perspective, how does that usually work within an insurer?
From the perspective of a rating engine being independent from the policy admin system, it allows for the rating engine actually to be deployed in a range of different places. So, for example, some people will use it as a SaaS service, so a particular vendor will host that, or it can be deployed within the sort of the existing insurance carriers portfolio and network. And basically, most external rating engines will basically look to integrate with some sort of a web service, so usually a REST service, which means that so long as your policy admin system can generate a web service and generate the mapping data that's needed for the rating call, it's really a pretty simple and straightforward integration. Typically, it's just as simple to integrate with an old legacy mainframe system as it is with some of the more modern policy admin systems that are on the market today.
Okay, great. And as far as, and I guess maybe again, looking at this through the lens of IT, if we think about, some of the drivers, so what would influence a company, or what would appeal to a company to consider externalized rating?
Charlie, there's a couple of different aspects that play into this. Two that come to mind for me, at least, are first, we talked a little about this being sort of native. And so instead of having to compromise on how you build your rates or compromise in the tools that you use, you've got a full workbench designed specifically for this, for rating. And that gives the end user this wealth of ability to be creative in how they approach the business problem and not have to worry about what a specific policy admin system can or can't support when translating those rates to a policy administration system. The other thing that I would bring up is the idea of introducing rates into complex environments. So you might have multiple PAS systems. You might even have other entry points into needing rating. So for example, a B2B connection through a rating service, or potentially a web portal that provides rates back to prospective insurers. And the idea of externalizing this into a centralized place is you then don't have to worry about implementing them multiple times in multiple places for multiple reasons, right? You've got a single source of truth, and you can connect to that single source of truth, to enable, the right outcome for the organization and its clients. And then, Pete, I would say, you work a lot with our clients and insurers. I could probably share a little bit more about the benefits that they get in terms of, governance and rework, et cetera.
Yeah, for sure. Obviously a rating engine, most carriers already have one. They often cases have multiple versions of one. Most policy admin systems, most legacy policy admin systems have one. So really, the driver comes down to what value you're going to get from switching, because, they already have that capability. But really what we see with a lot of clients and a lot of folks in the market is you get much more sophisticated calculations. So you're not sort of limited by what the sort of the out of the box capability is. So it allows the business to really sort of drive new direction, create their own proposition, to differentiate themselves from their competition. That is a driver. Getting the rate to market faster, not dependent on, IT folks and policy admin changes and scheduling of changes and stuff. So the business having that capability in their own hand to be able to do it as needed, those are significant drivers as well. And certainly in the past couple of years from COVID with, sort of auto rate and even home rate, needing, maybe more than one rate a year, updated, we've sort of entered a market need to be able to get to market faster. And then with the ability to sort of deploy the same code, if you like, or the same logic that you've already built into your analytics, much less rating errors seen in production. So, when you're not getting fined, you're not, sending policies that are incorrectly rated to clients, and the IT organization isn't having to do a lot of sort of work to identify policies that have been, sort of impacted and working with the business to rectify that. So, there's a lot of value in that. In traditional budgeting, those costs are often hidden, are hard to calculate. But really, the more you can sort of shine the light on, those costs that you're absorbing today within your organization, probably the stronger the argument is to make that change to externalized rating and having a more end-to-end life cycle in terms of your pricing and rating capability.
Okay, so sounds pretty positive, I think, from that perspective. So, John, you talked about, no compromise, I guess, in actually the technical rating, because I guess you mentioned, at the start that we are very focused on, say, the actuarial space. And I think in our products, we can really embed, and kind of, I guess, keep pace with the latest, rating approaches and methodologies. So that can be brought to bear, and then combining that with what you said, it can be, introduced, I guess, quickly in a way that's governed and robust. I like your comment about kind of less errors as well. John, you talked about multiple policy admin system environments. So having a single source of, I guess, rating or pricing truth that feeds into different platforms. At least in my experience, there's a lot of insurers that still have potentially more than one PAS out there or are, kind of mid-flight migration between two. So I would assume that this would help out in a migration case as well, where even if it wasn't necessarily the long-term solution that it was going to be connected to both platforms, the rating, externalizing your rating could help you support the business during the transition.
Yeah, I mean, absolutely, right? So there's a lot that can go wrong in transitioning from one policy administration system to another, or consolidating multiple policy administration systems into a single policy administration system. And this is really an opportunity to externalize complexity, right? So if I take rating as the topic here, I externalize that rating. I create its own sort of space where you can validate that it's correct and connect to it. Then I've taken or simplified the conversion process, right? And it's one less thing that can go wrong, one less thing that needs to be validated in consolidating platforms or converting platforms as you're going through that process.
Yeah, I mean, I don't almost go one step farther, and it's almost a safety blanket in a way. If you look at kind of the scale and all the different work streams and everything that's involved in a policy admin system replacement program, I guess in some ways being able to kind of pull out the rating or the analytics piece and kind of keep that stable, during the change is probably something that's quite, reassuring, I would imagine. And actually, thinking about kind of externalize and kind of taking functionality, say, out of the core platform, if you will, John, that kind of, for me reminds me of, I think, a much earlier podcast that you and I did together about ecosystems and partnerships. And, in some ways, externalized rating is a prime example of kind of taking some specialist capability and kind of taking that and being able to connect it and bring different vendors together to collaborate on that. So, that's a nice kind of full circle that we've come in talking about this.
Yeah, and I think too, one of the nice things about the tools that are in the market, and specifically Radar, the tool we offer, is those same specialities that we've built into the tool for rating can be extended out to aspects of other parts of the value chain, right? So decisioning around claims and claims management, or decisioning around and driving machine learning into the underwriting space. Those aspects of the value chain are very, very closely related. And this, purpose-built tool can be used to support multiple parts of the value chain once it's up and running and in your ecosystem.
Maybe I'd add to that, 25 years ago when I was toiling away as a business analyst on development projects, sort of forms and publishing was sort of where, there was the initial push to extract that out of legacy systems, and was being driven by, a need for being able to manage large amounts of forms and be able to do things faster and manage maintenance and whatever. This I think is just, we've reached a point in which, from a rating engine perspective, the sophistication, the need for speed to market, the need to be able to sort of do things faster and cheaper, has sort of reached that portion, if you like, of the portfolio. And so products like Radar and similar products in the market, I think are driving deeper into people's thoughts now in terms of how to pull that out of the policy admin system and reach some of the benefits and sort of flexibility and maintainability that maybe previously over the past 20 years wasn't as important, and now is becoming much more important as folks look to do things faster, more flexibly, and differentiate themselves a little bit more in the market going forward.
And for me, that's not a knock against the policy admin systems. I think they have such a broad scope, right? So that's a challenging piece of work if I put myself in their shoes. So I think, in some ways, I feel that this is kind of, I guess, accretive to the ecosystem in that, there's so much to focus on there and so much to the inner workings and the end-to-end life cycle of a policy and all of that actually, giving some breathing space and offering something in the externalized rating space is probably a good thing from both sides. So, we've talked a lot about kind of the positives, and maybe I'll ask you guys to kind of put your IT hats on, from any downsides, what are if you're an insurer out there listening to this and you're thinking about externalized rating, what would be some of the reasons what would be some of the areas you want to think carefully about? Maybe I'll put it that way.
I think overall, from an IT perspective, it's still, you don't want to add something new to your portfolio. You don't want a sort of new technology unless it's really going to drive, business benefit. And I think, more and more the carriers are seeing the benefits that are coming from that. Certainly, the performance, the security, the sort of standard starting points that most IT people think about when they're bringing new technology in, either as a SaaS product or to add into their portfolio and into their network. I think the capabilities of a rating engine, what you expect from it, they don't raise significant new issues in that regard. Most rating engines don't retain the data. It's a sort of transient service. Performance is usually much better than the sort of the policy admin system elements. So it really is about, getting past that latency, if you like, about, okay, I want to add something new to my portfolio. It is something I might have to maintain and kind of support going forward. Is that really going to add to, the business as usual costs and expenses that I need to accrue, or is the benefits for the business and the sort of low end impact to adding that to my portfolio sort of worth the expense and the effort. And I think, the rating engine as an externalized component, looks pretty good, from all those dimensions.
I 100% back what Pete's saying there. I think when you look for or try to find potential downsides, cost is one that bubbles to the top, right? There's the cost of the tool, there's the cost of the project. But I think when you dig in and do a business case, at least when we do this, with our clients or prospective clients, it really turns into all upside, right? Between the reduced cost of rate deployments during the course of the year, between the ability to get those deployments to market faster and realize business benefit faster, and really that upside potential we talked about earlier, to be more creative with products, enables greater profitability. That when we sit down and really dig into and build business cases with clients, that cost quickly turns into an upside.
Pete, you used the word latency, and I was just thinking about, so we are kind of putting two systems together here, and I think you were talking about actually, rating and pricing is come to the fore, and maybe how it hasn't before. I would assume that the requirement for a very fast response is only ever increasing. Talk to me about maybe externalized rating and latency. Is that an issue, or is that just the turnaround time is lost in the overall noise of the response?
And Charlie, I think from a latency perspective, there's an element where your rating engine being close to you, sort of supported within your network, sort of removes that. But if you do take a SaaS service, just the speed of the performance off a rating engine, maybe compared to the rating engine on the legacy side, means that even with the legacy, with latency, you're not sort of recognizing or seeing much change. I would say that, with the push towards, a lot of SaaS services and a lot of SaaS-based services, whether it be rating engines or whatever, I think there's a recognition and almost a built-in expectation that legacy now is just something that gets managed in terms of carrier operations. And I think the benefits that they see from not having to maintain and support that, and the little bit of latency that they may be experiencing, that isn't affecting a user experience, means they're willing to sort of play that game a little bit and see that as a relative trade-off. I do think that by their nature, rating engines, are probably, not that impacted by latency or slowness in general. And so it's a really good capability and component within your portfolio that, having as a SaaS service, is not a big deal and not a big decision for you.
Maybe I'll open this up to kind of either of you. So, we've talked, I guess, not necessarily from our perspective, but certainly as a company, as a firm who provides externalized rating solutions, I think that we see lots of upside in it. But, it really is a collaboration with the policy admin systems. And so, any insight into kind of, if you could put yourself into their shoes, kind of what are they thinking? What's their perspective, I guess, in your experience working with them?
I guess from my point of view, they like that we exist. They welcome that we exist. If you think about the size and scope, and I think you mentioned this earlier, Charlie, the scope of a policy admin system, I mean, they're dealing across multiple parts of insurance and insurance administration. They're dealing with data, rules, workflow, logic. They're so big and so complex that when a client wants something very specific in the rating space, it's a comfort for them to know that we are out there and positioned to help their clients be successful in a place that would otherwise require them to make a significant incremental investment to get to the same level of functional value that a tool like ours provides to an insurer.
Yeah, I would maybe add to that. I mean, I think a lot of policy admin systems are, position themselves not just as policy admin systems, but essentially the insurance solution, if you like, on a much more broader scale. And as a result, I think they're much more open to ensuring that what they're bringing the value to their clients, is as broad as possible. Certainly, in talking to, one particular policy admin system vendor, I was surprised to hear that when they get RFPs, they are asked whether, they support integration with, X, Y, and Z externalized rating engine in a similar way that when we get RFPs, we're asked whether, Radar can interact with, other policy admin systems. So I think the market is driving an expectation of having that flexibility. Insurance companies are driving both the policy admin system as well as the rating engine vendors to be able to, interact and integrate, smoothly, quickly, produce accelerators and the like, in order to make the development of that and the maintenance of that sort of faster. So I think it's an emerging and growing relationship. And I certainly think that it's only going to get sort of more and more expected, and will continue to develop in terms of those partnerships going forward.
You mentioned accelerator, Pete. So I think in some ways, I guess that's a testament a little bit to the, not necessarily the buy-in, but the merit and the value that externalized rating brings. What I mean by that is that some of the policy admin system vendors are, legitimately going out of their way to try and help bring the industry together. So, kind of kudos to them, right? They're trying to build, pre-built connectors and accelerators that give their clients the flexibility to create their ecosystems, if I can use that word again. So, I think that is a very positive, I guess, move. not necessarily that you always need connectors for everything. I think a lot of people have been connecting systems for a long time without pre-built code, but I think they certainly do have their place, and they can, speed to market. And even if it's just giving you confidence or giving an insurer confidence that the two platforms can talk together, I think that's important.
For sure. And I also think that integrating with an external rating engine or solution was never that long or complicated, in the grand scheme of things. Certainly when I was, on the carrier side, you sort of expected every change to be at least a year, right? They were sort of very long things. Certainly with my experience with Radar and some other products out there, it's a matter of months. So it's not been very difficult to do that. But I think, now that we've got people recognizing that the speed of market on maintenance items can be really quick, now the focus from an IT perspective is that, well, that's great. You're helping the actuaries and the business get their rates to market really quick. But that first integration seems like a little bit of a hill to climb. It still seems like there's a fair amount of sort of IT specific work that's needed to get that done. The more that we can, accelerate that process, make the mapping of the data, from the calls to and from the rating engine and the policy admin system as fast to develop and deploy is better. From an IT perspective, that starts to drive even more value for them. And the ability to now have, these policy admin systems with these partnerships with sort of approved, pre-built connectors or accelerators that make that process even easier. I think from an IT perspective, again, just adds icing to the cake a little bit in terms of making that change and the cost involved in that. Again, much more sort of appetizing in terms of when coming to make decisions.
John, anything you want to add in closing?
Yeah, I mean, in thinking about how I would summarize the topic, I think there's a point to be made about building the business case, right? Good, bad, or indifferent. In a lot of organizations, when you're thinking about an investment in technology, it's often the technology organization that's driving building the business case, about deciding whether or not, to make the investment, about helping your business partners articulate the value of that investment. And I think, one of the things that we find when we work with organizations is, we bring a perspective about the holistic business case. We have both actuaries and technologists that have worked at carriers, sometimes with decades of experience. And so as you're evaluating, whether or not externalized rating is the right tool, or the right model for you, thinking about the end-to-end business case, the upside business value, the potential cost savings, really helps drive an outcome that if this is the right tool for you or the right paradigm for you, almost always produces a positive ROI.
It was a very interesting discussion. I want to thank you both for joining. So thanks, John.
Thank you, Charlie. I appreciate being here.
And thanks, Pete.
Thanks, Charlie. I appreciate it.
Thank you to our listeners as well for taking this opportunity to listen to another episode of Talking Technology.
Thank you for joining us for this WTW podcast featuring the latest perspectives on the intersection of people, capital, and risk. For more information, visit the Insights section of WTWCO.com. This podcast is for general discussion and/or information only, is not intended to be relied upon, and action based on or in connection with anything contained herein should not be taken without first obtaining specific advice from a suitably qualified professional.